Good afternoon. Good afternoon, everyone, and welcome to the 10th and last webinar of the 2022 and 2023 IMOS webinars program. My name is Caterina Giusti. I'm Professor of Statistics at the University of Pisa in Italy. As a member of the IMOS team of my university, I'm working at the organization of this webinar program on behalf of Eurostat, together with the German company Startup. Now, let me first explain for any newcomers that IMOS stands for the European Master in Official Statistics, a joint project of universities and data producers in the EU member states, EFTA and EU candidate countries. If your university is interested in applying for the IMOS label, please consider that the permanently open call for universities is available on the IMOS dedicated page on the Eurostat website. For staying in contact with the IMOS news and community, please follow the IMOS Twitter. The Twitter handle is @EU_IMOS. It's now time to start with our webinar. Before I give the floor to our speaker, let me first briefly explain how we run the webinar today. As you can see this here, the IMOS webinar stream on Zoom. The webinar is recorded and the recording will be uploaded on the IMOS YouTube channel, where you can already find the recording of the past webinars as well as the past two IMOS workshops. As a participant, you can watch and listen to the webinar. You can also use the Q&A manager to pose your questions to the presenter during the presentation. Our speaker will be answering questions on two occasions during today's webinar, one during her speech and then at the end as the part of the final discussion. Should you have any technical problem or question, please send a message in the chat and you will be contacted by one of the members of the technical staff. So today we have the pleasure to host Alessandra Coli. Alessandra is a statistical officer for sector accounts production and key indicators at Eurostat. Since 2006, she was tenured researcher in economic statistics at the Department of Economics and Management of the University of Pisa, where she was teaching undergraduate and graduate courses in economic and business statistics. And then since October 2010, she left the university and became statistical officer at the European Commission at Eurostat in Luxembourg in the National Account Production Unit. And today, Alessandra will indeed present about household distributional accounts for measuring economic inequality, ongoing activities at Eurostat. So she will present in some, I think, of her research, recent research work. So Alessandra, the floor now is yours until the first question break.
Okay. Thank you for inviting me to make this to hold this webinar, and thank you for the presentation. Indeed, I arrived here at Eurostat in 2020, not 2010. Maybe.
Sorry, it's a long time we miss you.
Yes, and it's true that my permanent job is the University of Pisa, where I will be back in the next months. Okay, I'm going to share my screen to start the presentation. Okay, let's see if it works. No, sorry, this one. Okay. I hope everything is fine.
Yes.
Can you see?
Yes.
In the good mode or in the it is in full. No,
you also have the application. No, maybe if you go back.
Maybe, okay, because it is, I don't know, something changed. Okay, let me see. Let me see if it can be done.
Oh, no, I think you have a different menu.
Yes,
maybe you can
let me see if I can do it again, because I made it like we tried, but it was different. Let's share like this. Nothing to do.
We can still, if you
want. No, I can do something like that. I will try again. Okay.
Okay. Now
I think it's fine. Yes. Okay, so let's start with this webinar about household distributional accounts for measuring economic inequality. The outline of the presentation, okay, let me check. The outline of the presentation is the following. So it is made of 4 main points. At first, I will explain what household distributional accounts are and what is their place in national accounts. Then I will talk you about the information that we have in official statistics on household budgets. And I will highlight the pros and cons of this information. The third point is about the methodological challenges for building these household distribution accounts. And in the end, I will tell you something about what is going on at Eurostat in official statistics in general, at the international level, and at Eurostat in particular. I would say that this issue, this topic is very complicated, is complex, and so it is not easy to go into details, especially in a presentation of 1 hour. So I will only show you an overview of the main areas, and I hope to, how to say, I hope to arise some interest along this topic. And for this reason, as a first point, I would like to understand from you if you have any knowledge of this topic. And for this reason, it would be nice to make a poll that Caterina is going to propose you. So you have a first question.
Yes, the poll is started.
Okay, yes, I can see. I don't know if you can see too. So have you ever heard of household distributional accounts? This is the first question. 1/3 yes, 2/3 no. So we have 1/3 of person that still have heard of it, of these accounts. Okay, if we can go to the second question. The second question is about national accounts, if I remember well.
Yes.
Have you ever studied national accounting in your course of study? Yes, all of them have studied. So, do you know the meaning of adjusted disposable income? Okay, let's see.
Oh, no, we have, okay, now the results are, yeah, updated also for the previous question. Sorry, Alessandra. Yes. So we have also, yes, no, in the first one, have you ever studied? We are half and half, almost 60-40. Why, yes, for the second one, 80% knows about adjustable disposable income, 20 no.
Of course, of the one that have answered yes at the first, at the previous question. Yeah. Okay, this is important for me to understand because there is one part of the, okay, let's see if we can go back to the presentation. Ask, okay, I'm going to, sorry, but there is something that doesn't work very well. Okay. There is something, yes. I'm not able to. Sorry. I have a problem with the, okay, but we can.
You can see the slides even if
yes,
you.
Yes, but I cannot put it in the mode because I have some windows open that I don't understand how to put away because they're coming here and there. Let's see if I can do something like that. Okay. So.
Okay, now it's better.
Okay, yeah. So the first point is this. Household distributional accounts, as I told you, represent a complex topic, and it is not easy to explain them, especially in a short time. I thought that a good idea could be that of trying to explain the meaning of household distributional accounts, word by word, just to clarify what we are talking about. So the first point, we are talking about household because we are interested in the economic behavior of households. And here we have to make it clear that we are not talking about individuals, but households. So groups of individuals who share some economic resources, who live in the same dwelling. It corresponds more or less to our idea of family. So we're interested in households here. Then the second word that I would stress is accounts. When we talk about accounts, we think of budget, entries, outlays, monetary transactions. And indeed, we are interested in the household budget items that concern income, final consumption expenditure, and savings. These are the relevant economic transactions we are interested in our household accounts. But then we have another word, which is distributional. This adjective is essential in this expression because it highlights that we are not interested in analyzing, in estimating the amount of household transaction, economic transaction, but their distribution across different type of households. So we are interested, for example, to know how compensation of employees, wage and salaries, distribute across households with different characteristics. We have to decide which characteristics we are interested in. We could, for example, be interested in analyzing the distribution of wage and salaries across groups of households classified according to the region, the territory they live, for example. Or we could be interested in analyzing the distribution across households in different standards of living, so from the poorest to the richest. So the idea is that of analyzing all the economic transactions of household across different groups of households. This make you think, I think, the expression accounts make you think of macro data, national accounts. No? So now we are in the field of national accounts as a starting point. But indeed, we want to add information on distribution inside these national accounts. And for doing this, we need to have microdata. Microdata may have different origin. They can be data from surveys. They can be data from administrative registers. What we need to have is something that allows us to distribute the totals that we have in national accounts. So the first part of this presentation is about the position of household distributional accounts inside national accounts. And for doing this, it is at first necessary to remind ourselves what national accounts are. National accounts, as you know, most of you know, is a system of accounts that describe in monetary terms the economic process that takes place in a country in a certain period, usually 1 year. When I mention the description of the economy, I mean that we observe, we focus on each step of the economic process, from production to the earning of income, to consumption, investment, till the end. And the end is what the country has, what is the position of a country with respect to the rest of the world. if the country is in a debt position or in a credit position. We call them accounts, national accounts, because the framework where these estimates are put is based on a framework similar to that of business accounting. And for you that are familiar with business accounting, you know that we have a sequence of accounts that leads to balancing items. And this is similar in national accounts. We start with a description of production till, as I told you, the determination of a debt or credit position of the country versus the other countries. In national accounts, you have to imagine all these transactions that take place between the agents of the economy. And you have to imagine that if you want to have a description of them, you have to group them. And this is made by grouping them according to their natures. For example, we distinguish wages and salaries, property income, social benefits, and so on. So we group all the economic transactions into specific categories. But we do more in national accounts because we group economic transactions also according to the type of economic agent who receive or pay the monetary transaction. The agents are the following. The first group of units is constituted by non-financial corporations. And S11 is the code that we use in national accounts, more specifically in sector accounts, to indicate this first group. Then we have financial corporations, general government, households, and no-profit institution serving households. The system of accounts relating these sectors is called system of sector accounts because each of this group is a sector. And in these sector accounts, we show the financial and non-financial transactions of the economy as a whole, but also for each institutional sector. And we are able to highlight their interdependencies in a systematic way. National accounts, as many of you may know, is one of the statistical fields more checked. It is relevant, it is really important for determining the economic policies of nation and also at international levels. So comparison across countries is essential. And in order to be comparable, national accounts, which are usually compiled by the national statistical institutes, sometimes from the central banks, the compilers have to follow an internationally agreed concepts, definition, classifications, and so on. And this, the fact that you align this, follow these rules, allows to obtain accounts that can be comparable. At international level, we have this system of national accounts, which is, you see here, the system of national accounts that is in force is the one that goes back to 2008. And then we have the European system of accounts, which is called European System of Account, or ESA, in this case 2010. And this latter is also a legally binding regulation. So countries, European countries, have to follow these rules. Here, I don't know if it's the case to go through the link, because you will receive, I think, the slides at the end somewhere. And in the slides,
yeah, sure. The slides will be on the website, Alessandra. So if you don't want to read,
yes. In this case, no, I will do it later.
The link
but
is
in
there,
this case, you have the link here to go to the handbooks, or to these two handbooks, the SNA 2008 and ESA 2010. They are not so easy to read, I can assure you, but if you are interested, you can have a look at these guidelines that are very precise. Okay, so what is the collocation of household distributional accounts in the national account context? We have national accounts that are compiled for the economy as a whole. The code is S1. And in national accounts, you have also the transactions of the total economy with the rest of the world, which is called S2. Then we have sector accounts, which is indeed the unit, the team where I work here at Eurostat. And here you have accounts for these different sectors. If we focus on households, we can think of household distributional accounts as a detail of the household accounts. Okay, so it's a sort of in-depth analysis, I would say, or a development, better, of the household's accounts. Yes, now I would like to tell you where you can find the information I'm talking about. If you are interested in find the national accounts data and sector accounts data, you can go to the database of Eurostat and you will find this framework. Let me try to go. I will see if it works. So let's hope, otherwise I will share the screen again. Okay, let's see. Can you see, Caterina, or not?
No. You're still in the presentation.
So there is
I think you have to, or to switch to the browser.
Let me see if I go. Let me see, how can I do? Because it was here. Let me check. It is really strange. I can perhaps go here.
Yes, now we can see the website.
Okay, now you can see it. Okay, so you have here, this is the Eurostat database. You can find it very easily if you look for Eurostat database. And you can see here that you have this data navigation tree. If you are interested in national accounts, you have to go here. You will find that you have national accounts. So we go ahead. And then you have here annual national accounts. And you see that you have also annual sector accounts, okay? I have told you that distributional household distributional accounts are a development of the household sector accounts. But where are household sector accounts? You have to go to the annual sector accounts and then here in non-financial transactions, because we are interested in this part. So let's see, just to give you an idea. I hope that you have already used this data, but in case you haven't, you can see more or less how it works. So you can see here that you have on the left side all the countries. You have also the aggregation, European Union, and Euro area. Then you have the years, okay? And what appears here in the table is what you have selected. What you have selected in this part of the table. So you can see that you have disposable income gross is the economic variable that is shown here in the table because it has been selected. And then you have this sector, which is households, no profit institution. So it is a group which is made of both households and no profit institutions together. You can decide to change the flow you're interested in. In this case, it is a balancing item, disposable income. Here you have the unit of measure. You can decide to go to other national accounts items. So if you go here, you can see that you have, okay, doesn't go. You have a lot of items. Can you see gross capital formation, changes in inventories, acquisition led disposable, exports, imports, lots of wage and salaries, and go on. All these are referring, are referring to the selection that you have done before. So if you had decided to look at, let's see, sorry, because it doesn't work very well, so I have to go back. Okay, it's just to make you understand that that pushing this cross here, this plus, sorry, you can decide what selection to do. But in the end, you are able to show and to download tables with lots of information. And these in particular refer to sector accounts. Okay, now I think I have to stop and go again back for the presentation. Can you see it again?
Yes.
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 So now we can go to the second part. So at this point, I would like you to have understood what more or less national accounts are, what sector accounts are, and how household distributional accounts represent a further development of sector accounts. We have already stressed the fact that we need to have macro information from national accounts and micro information from micro data sources to build household distributional accounts. So in this section, I will tell you something about the pros and cons of the macro perspective and of the micro perspective with respect to the analysis of household economic behavior. Let's start with national accounts. Sorry. Can you see it well or not?
Yes.
Yes. So national accounts have some advantages indeed. The first is that you can have consistent information on household income, consumption, and wealth. And these three components need to be considered together to really understand what is the household economic well-being. National accounts provide totals for these different components and show the links between them. Another important point is that national accounts are designed to be exhaustive. You will, I don't know if you have heard about the exhaustiveness of national accounts. The meaning is that national accounts aim at considering all the economic transactions that take place in the economy. And this means that also the underground and illegal economy need to be considered, but also transactions that are not monetary in their origin, they are in-kind transactions. And if you think this is a crucial point, if I want, for example, to compare the well-being of countries where deeply different welfare systems, where, for example, in one country, you have cash transactions for supporting people, transactions, social benefits in cash, and in other you have social benefit in kind. If you limit to consider only those in cash, it is evident that you cannot do a very good comparison. It is necessary to consider all the kind of help that support households. In this perspective, national accounts are able to provide you this information. Another point is the underground economy. National accounts estimates include the underground economy, and this estimate is obtained through indirect methods. While, of course, microdata sources, if you think, are not able to capture these phenomena. And then last, but not less important, national accounts follow, as I told you, a methodology which is harmonized at a global level, and this makes these accounts comparable worldwide. Okay, but the main problem of national accounts is that they do not provide any information on the distribution of economic resources and uses among different kinds of households. If we think of, okay, if we think of microinformation, well, when we talk about microinformation, we think of tax data, for example, administrative registers, tax data, health data, education, expenditure statistics, etc. We have lots of this information, but we have also surveys, and some of them are really, really important to capture the economic behavior of households. And at Eurostat level, we have two main and relevant surveys, which are the EU-SILC, European Union Statistics on Income and Living Conditions, which is not only a survey, it integrates also administrative data in some countries. And then we have the Household Budget Survey, which provides useful and detailed information on the consumption of households across at individual level, and also for different kinds of consumption categories. What are the advantages? Obviously, they provide measures of economic inequality across individuals and households. But they fail to record some economic resources like social transfers in kind that I mentioned before, or they may capture some resources only partially. For example, there are studies that show that surveys are able to capture a part at least of the hidden economy, but not all what we think that the hidden economy is. Another very important point is that microdata on income, consumption, and wealth are seldom coherent unless they all come from one single data source. And this is a very important problem, and we will come to this again later. And then another limit of administrative data in particular is that it is not always possible linking the individuals. The information is collected on individuals, if you think, for example, of tax data, but it is not possible to link those data pertaining one single individual to the household he or she belongs to. So it is not easy to derive statistics at the household level. Okay. So in the end, household distributional accounts are able in a certain way to bridge macro and micro. They add up the benefits of macro and macro approaches because they aim at distributing household accounts totals among different types of households. But this information is derived from microdata sources, so that we really need to bridge the macro and micro perspectives and to align the information that we have on the two sides. Just two slides on this, just to make you see what we are talking about. Here it is the table that we would like, we should compile in case we want to build household distributional accounts where households are classified by quantile of disposable income. So you can see that in columns by columns, you have, in the first column, you have the description of the economic items that we would like to distribute. For example, let's start with an easy one, wage and salaries. If we want, from the sector accounts, we have the total of wage and salaries in a certain country in 1 year. But we want to distribute wage and salaries across household classified by quantile of equivalized disposable income. So we should fill this table and see the amount, how the amount is distributed between from the poorest group of household to the richest, quantile 5. Okay, you have to imagine that we want to estimate this distribution for each income item. Okay, you see it is very detailed. In the end of the part pertaining income, you have what is called disposable income, which is a relevant, the most important indicator of economic well-being for households. And if you add also the social transfers in kind from education, health, and other, you obtain what is called adjusted disposable income. So, answering to the one of the questions that we made in the poll, adjusted disposable income is something that add to the monetary part some entries that are not monetary in their nature, because it consists of service in kind provided to people. Okay, and we have to do the same if we go on the consumption side. Here you have you need to compile this table, and you see this is even more complicated because you have to distribute consumption expenditure by each category. So how much is spent in terms of food and non-alcoholic beverage across the different groups of family, and so on. In the end, you will get, as a result, the saving of households. So if we are able to fill all these tables, in the end, we will have also how gross saving is distributed across these groups of households, from the poorest to the richest. Okay, I would stop here if you agree, if you for making a session on okay. Caterina?
Sorry, Alessandra. Yes,
Yes,
I was checking that. We received 2 questions. I think the one actually you already replied, because it was about if European countries follow both the international and European rule for comparisons. And I think you already specified that, yes.
Okay, yes. The
comparison is worldwide.
Mm-hmm.
And then another is about when data referring to 1 year are usually available. Okay,
so for sector accounts, you have them usually in October. You have the at Eurostat level. It depends on the countries, okay? Because there are some countries that, for example, Italy, I'm thinking of Italy because I know it, you have estimates in February for the year which has finished, 2 months before, February, March. Germany also provide some data very early in the year for the T-1 year. So after 3 months, for some countries, you already have some results at Eurostat, and here at Eurostat, of course, we publish data after the validation process as soon as we receive them from countries. Okay, but there is usually they are required, not usually, they are required to send data concerning the year, the annual sector accounts data in October. So, for example, in October 2023, you will have data concerning the year 2022.
Yeah, okay, Alessandra, sorry, the question was actually even more specific when they are on the Eurostat website also.
Yes, on the Eurostat website.
Okay.
If you have to check, because as I told you, it may happen that one country sent data during the year in advance
Okay.
with respect to the
others.
scheduled time. And so when we receive them and we validate them, we publish. So you have to check in
Okay.
on the website, but countries are required to send data in October of each year, referring to the previous year.
Okay. And then another question, if you can please specify again, if survey data, for example, the USILC, are used in any way in the national accounts or not?
And this is an
interesting.
interesting.
This again. Yeah.
Yes, no. This is an interesting question, because I think that it is not clear for many users, for students, how national accounts are compiled. Sometimes we have the idea that it's a sort of business accounting, that data comes from I don't know, one wonderful data source that give all the information that we simply sum up, okay, to obtain national accounts. But it is not like that. We need to use several data sources from of different nature. Unfortunately, USILC is not used that much in national accounts, at least from my experience in Italy, but also I see from other countries, because there is also I don't know, maybe it will be more used in the future. We hope that this project, household distributional account, will enhance the use of USILC also in national accounts. The problem is that, as I told you, you have to keep in mind that we need in national accounts to capture also not easily collectible information. So, for example, underground economy, it is, of course, it is difficult to expect that people interviewed in USILC provide all the information about hidden income, for example. That is why sample surveys are not used that much from the income side. Okay. What do you think?
No more question for the
moment.
moment.
No more questions, so I can go on. Okay, now we have, oops, let me see. Sorry, I need to go. Yes, something on the methodological challenges. Okay, it is not easy to go quickly, but for building household distributional accounts, you start from the totals of national accounts. And then you search for variables on the microsite able to distribute those totals. Okay, so practically we have to, for each income and consumption macro totals, we have to find a corresponding variable on the microsite. One problem is that no single micro data source contains all the information needed to distribute the macro totals. Okay. For building household distributional accounts, we have to face two main problems. The first is that we have to reconcile micro and macro data. If I want to use micro information for distributing macro information, I need to reconcile them. For example, if on the national account side, I have a definition of household which is a little different from what I have on the micro side, I have to find a method to align them. Okay? So this reconciliation, it is a very important step and it requires resources. We have to harmonize concepts and align micro and macro information at our best. However, in some cases, not all macro variables have a corresponding item on the macro side, on the micro data source. For example, I mentioned you the underground economy. So the micro data in that case are not of help. In other cases, I can identify a variable on the micro side, but that roughly approximate the corresponding total macro from a conceptual point of view. And even in the case of a good conceptual correspondence, I will discover that the national accounts totals will never perfectly match with the micro data totals. because some macro gaps generate. Just to give you an example, this is from the experimental statistics on Eurostat. I will tell you something about later. This is Belgium for the year 2019. You see, if I take wage and salaries from the national accounts, I have this amount. If I take it from EUSILC, because I think that EUSILC is the best data source that can provide me the distribution of wage and salaries, I see that I have this amount. So we have this different. And if I make the ratio between the amount in EUSILC over the amount in national accounts, I discovered that, well, more or less we are there. It is reasonable. We can use it. But if I consider, for example, property income received, you see here that the difference is huge, really huge, and that EUSILC can cover only more or less 24% of the amount that I have in national accounts. This, of course, may depend on several reasons. The concept is different, so the definitions are not so aligned and cannot be aligned more. But it may depend on the fact that in the survey, this kind of income is underestimated because people is not keen to declare. In any case, we have this macro gap, and we need to fill it to understand. Otherwise, we are using only some information that we are not sure that can be used for distributing correctly the national accounts total. So the first major methodological challenge for building household distributional accounts is this one: how to allocate the macro gaps. There are various methods. I could choose the proportional allocation, the allocation based on a proxy variable or on external data. What is important is that I have to keep in mind that one method instead of another can significantly affect inequality indicators, can lead to very different results. So it's really important to improve the research in this field and find the best way to allocate these macro gaps. The second point, I already mentioned you that it is not possible to have one single source containing all the information necessary for the distribution of all national account items. For example, EUSILC is very good for all, is good or very good for distributing the income items, but it is not helpful when you have to distribute consumption expenditure, because that survey does not collect information on the categories where households spend their money for consumption. So I have to choose another source. But what happens is that independent data sources often provide inconsistent estimates for the same phenomenon, or inconsistent estimates on interrelated phenomena, for example, income and consumption expenditure. And this inconsistency can be transmitted to the distributional accounts and lead, for example, to implausible propensity of consumption, or also to negative savings, where negative savings are not reasonable. Just to give you an example, which is taken from a work, an old one, you can see in this table, this is referring to Italy. You have 3 different sources. The first, the SHIV, is a survey made by the National Bank of Italy. Then we have 2 surveys, the HBS and ETSILC, made by the Statistical Institute, by ISTAT, okay? And then you have the national accounts from ISTAT. So what can we see here? At first, I start with national accounts. If I use national accounts data, I have this consumption, this consumption propensity. Okay. If I use the SHIV, the first micro data source, I have a significantly lower consumption propensities. However, since this survey contains information both on income and consumption, only the total, not by consumption categories, but okay, we have some information in the SHIB also on consumption. You can see that these consumption propensities for those who live in Italy are reasonable in the sense that you have higher consumption propensity, the highest consumption propensities in the south and the lowest in the northeast. Okay, these results come from a survey that contains both information on income and consumption expenditure. But if I mix the HBS with SHIB and HBS with EAT-SILC, so I consider income coming from the SHIB and consumption coming from the HBS, or income from EAT-SILC and consumption from HBS, you can see that I obtain really strange consumption propensities. And this happened for several reasons, of course. They are independent data sources, maybe the sample are different. I can find lots of reasons for this. But the problem is that if I use distributions coming from for example, HBS and EAT-SILC, and I try to build my distributional accounts, I could obtain strange results, not expected. For example, in this case, you see that we have the lowest consumption propensity in the south, which is exactly the opposite result that we have if we use the SHIB. So I think that, okay, I have to go more quickly. Okay, what can we do in this case? We need to build an integrated data set at the micro level before using this microdata for building distributional accounts. And we have different methods and solutions that have been tested, studied, and of course, research is needed in this field because it is not easy to find a solution. One first solution, which is the best perhaps in terms of accuracy, we should combine different surveys. So if we were able to obtain a survey collecting everything, that survey would be coherent internally, and so also the indicators coming from that combined surveys will be coherent. But this is also difficult and expensive, an expensive solution. Another solution is the record linking. The record linking means that you combine different data sources through common identifiers. For example, you could take the HBS, the survey on consumption expenditure, and link to it income coming from tax data or administrative data using a code, an identification code. And this is indeed a solution which is used in countries that rely on a very how to say, developed system of registers. Then there is this modular approach, so that we could, in a survey, not every time, but once, for example, every 3 years, 2 years, put some questions serving as hook variables to link consumption and income. And then we have statistical matching, which is what is used by some countries. The purpose is that of linking the HBS and EAT-SILC databases, assuming similar target values for households with similar characteristics. Okay, just a few words. I think, okay, we have almost finished our time. Eurostat has been involved in these activities on the development of household distributional accounts for many years. In the past, Eurostat was part of the expert group on disparities in a national accounts framework, which started in 2011. And current activities, now that group is the OECD is continuing the works of this group of the AGDNA, and Eurostat cooperates, participates to the meetings and so on. But in the last months, Eurostat had decided to focus on a task force involving European countries, this TFHTA, Task Force on Household Distributional Accounts, because we think that it is important to focus on quality. We think that household distributional accounts need to be more and more accurate in order to be used by users, typically for planning policies. So we would like to focus more and more on the quality and to enlarge the number of countries in building, producing their own accounts. Then we have disseminated experimental statistics, and we have also provided some grants for some countries to develop their own distributional accounts. This is this is the history of the jobs, the works that have been made. So you can see that we started from the recommendation of the Stiglitz-Sen Fiducie report on GDP and beyond. Indeed, distributional accounts are one of the suggestions that are in the report. If you read it, and then you see that we have all these steps. So the expert group that I mentioned before in 2011, then there was a second exercise, the first, a second, and the third exercise, and results were published. The report of this AGDNA group can be is published on the Eurostat website together with the experimental statistics. I haven't had time to focus on this, but you can use the slides to access the statistics and try to explore them. You will discover that we have different kinds of data sets. The first, national data and metadata, refer to statistics, to estimates made by countries nationally. The centralized exercise is something that Eurostat made to support those countries that are not able to build their own accounts. But of course, Eurostat can rely only on less information that available nationally. So these results are really very experimental, but we think that they are useful to push countries to start doing their own accounts. Okay, this is an example of information that you can obtain by using these distributional accounts. Perhaps this is more interesting. You can see here that you have a comparison between two countries, Slovenia and Mexico. And you see here the share of consumption expenditure in two countries that have respectively the lowest and highest level of income distribution inequality. So just to give you an example, a few words, we have now this task force. It involves 16 members, the ECB and the OECD. And okay, with this task force, we invite participants to discuss specific topics and contribute practically, sharing their experience and yes, sharing their challenges and difficulties. Just to give you an idea of what we discussed, these were the concrete topics that were discussed at the meetings. Countries were asked to tell us what they would like to discuss, and these are some proposals. So you can see that the micro-macro gaps, for example, is really relevant we have problems to find information on population not covered by microdata, like institutional households, students, migrant households, etc. Then we know that we need the sensitivity analysis, and so we would like to propose some sensitivity analysis to make, and so on. And more specifically, for income, you see that we have these really large gaps, micro-macro gaps, in mixed income, property income, and current transfers that need to be resolved. Then we have a problem for the distribution of unobserved economy. Okay, and so on. These are some proposals from the countries. Okay, I think I'm not sure if I'm in time.
Yeah, it's okay.
Yes, it's okay, just a little late, but of course.
Yes, three, I think, quick questions. One is about, I think is referring to the table that you show. Are house and national accounts also available for regions or macro regions within a country?
National accounts.
Households, national accounts.
Household national accounts. You can, yes, we have the regional statistics. Okay. So you can check on the Eurostat website, but we have some information on this. And then you have also to consider that you can look at the national website, because some countries have more information than others, but we have information, only some indicators.
And one is more, I would say, on the statistics side. If I understand correctly, no measures of variability should accompany national account estimates since they are representing the population. Is this correct? I think it's referring to inference or
yes. It is. This is a point that you do not have, as if you think you do not have. Also, when you mention price indexes, for example, it is because these estimates are not based on one source. They are not a survey. You have to imagine that you have to take all the information you have on the transactions made by all the units in a country. So I invite you to think how you will handle this situation. And then you can easily understand that you cannot build a confidence intervals for this.
Yes. But in any case, even if you use a measure national side, at the national level, at least, I guess the error will not be so relevant.
Yes.
Yeah, but that's of course an easy question.
In the end, you have to, I think in the end, to have good and accurate household distributional accounts as national accounts, you have to rely on very good sources, basic data sources. That is the point. If you have a good system, you will have also good national accounts and good household distributional accounts.
And then another one is, I think, a curiosity. Are national accounts really exhaustive? Are there any measures available to evaluate this?
You can. If you see studies, research, national accounts is always considered as the yardstick, the reference. No, it is and then all the others try to rely to measure with respect to national accounts. Of course, we cannot have an answer because you do not have a universe where you can collect all the information and make the sum. It is not. It doesn't work like that. So.
Yeah, it's not easy.
If you, the method used is for building national accounts consists in collecting information from different sides, having the GDP as the key aggregate. Okay, so the idea is that I can estimate GDP from the production side and use sources that relate to enterprises. Then I can estimate GDP from the income side, looking at what kind at the income received by those who give production factors. And then at the end, I can estimate GDP looking at what is it is how to say consumed in the system. So the balance of these three different points of view of the same aggregates lead to the estimate of the GDP, which is the core of the national account system. All the other aggregates are estimated consequently. So the idea is that, okay, I do my best to collect all the possible data sources from all the possible perspective, and hoping in the end to have the good estimate.
Yeah. Okay, so I think we are now a little too late. We have to close.
Yes,
so thank you, Alessandra.
Thank you for
this
attention.
Very presentation. So many thanks also to all our participants. And as participant, you are invited to fill in a short survey about today's webinar. The survey will open in your browser just after the end of this Zoom meeting. If you don't have it right now, you will receive a link by email to fill in the survey later. We really appreciate your feedback to further improve the EMOS webinars. So this was the last webinar of this year program. But we're already working on the next EMOS webinar program that is going to start actually still this year in October. We will keep you updated on this, and we really hope that you will join us again. So please don't forget to keep an eye for our website, emos-events.com, and to follow the EMOS Twitter account. As I said, the handle is @EU_EMOS. So thank you again, Alessandra. Thank you to everybody. And I wish you a nice evening and a great summer. So we'll see you hopefully in the fall. Okay.
Okay.
Thank you.
See you. Bye.
Bye-bye.